As a matter of fact, starting your investment journey could be a daunting process because it is not always easy explaining to especially new investors that there is something called the stock index and you can't invest in the stock index. Rather, if you want to make money from the stock market, you have to invest in another product that replicates the performance of the stock index. And how much money you make or lose depends on the performance of the stock index that you did not invest directly in. It is sometimes hard to understand, and some of this confusion sometimes is the reason why a lot of people make mistakes and lose money at the early stages of their investment journey. So in this video, I'm going to take my time to explain exactly what a stock index is and why you can't invest in the stock index, but then let you know the benefits of the stock index despite the fact that you can't invest in the stock index. And this is going to be the basics of your understanding to informed investment decisions. Let's get to work. So this video is a step-by-step approach, to break down everything perfectly to the understanding so that it makes it easier for you to know exactly what you do if you are beginning your investment journey. So first of all, let's look at what a stock is, and then we look at the stock index. Then we look at some we look at some of the popular stock indices or indexes that are available, and we explain why you can invest directly in these stock indices. First of all, we know stock as a share or equity of a company, all right? So if you own a stock or a share of, let's say, Amazon, it means you are a part owner of Amazon. And on that basis, you can claim certain rights or assets from the company from being a part owner of the company. All right, so now let's understand what stock index means. The moment we attach index to stock, now in the context of the stock market, we are talking of a statistical measurement, okay? So the stock index rather means a statistical measurement or a numerical representation of the performance of a group of Of stocks, all right? So before we even jump into what these are, all these are a cluster of stocks. Several stocks that have been brought together for a particular purpose. So for that matter, we could say all these are what? Stock indices or stock index. So to repeat what I said, the stock index in this context means a numerical representation of the performance of a group of stocks. Or you could simply say a mathematical calculation that represents how a group of stocks are performing at a given time. And by the way, if you come across stock index or stock indices, they practically mean the same thing. So stock indices could be taken as the plural form of stock index, and they are mostly used interchangeably, so you don't have to be confused when you come across either stock index, stock indices, or stock indices. Let's go on to look at some of the popular stock indices on the market that if you want to start investing today, you are likely to invest based on the performance of those stock indices. All right, so we have the Dow Jones Industrial Average, which is normally written as the DJIA. So this is one of the oldest, stock indices on the market. The Dow Jones Industrial Average practically represents 30 blue chip companies. Now, when we talk about blue chip companies, we are talking about companies that are considered the leading companies from their respective sectors. So for instance, if you want to take aviation or the transport system, for instance, everyone would agree that Boeing is a leading company. So we have Boeing in there. When we want to talk about software, computer stuff, we all know that Microsoft is doing very well. Now, when we talk about the financial sector, Goldman Sachs is there. So all the companies that you could consider leading companies from their respective sectors are likely to be found here. So it represents 30 of those companies. Now we have the S&P 500. This is probably the most popular stock index on the market. The S&P 500 represents or tracks the performance of 500 of some of the largest publicly traded companies on the New York Stock Exchange from the US. Now, when we talk about the Nasdaq Composite, we are talking about a stock index that is much particular to technology or computer-based companies or internet-based companies for that matter. So now we have understood what the stock index is. Of course, we know what a stock is. We know what the stock index represents. So let's explain why you cannot invest directly in the stock index. And if you can't invest in the stock index, then what is the purpose or what is the use of the stock index to you? One, it is an abstract concept. So we explain the stock index as a mathematical representation of the performance of a group of stocks. It's a theoretical concept. It is not tangible. It is not anything that you could see or you could walk to the stock exchange and say you want to buy a stock index. It is just a way of knowing how some stocks are performing. It is an abstract idea, so you can't invest in an abstract idea. And that brings us to the second point. There is no ownership of a stock index because it is an abstract idea, it is not tangible, it is just a theoretical concept. No one owns it, and for that matter, they can't pass it on to you, they can't sell it to you. You can't buy a stock index from anybody. And if by some dubious means you claim to have ownership of a stock index, I don't believe it is something that someone would want to buy from you, because it is of no direct benefit if someone buys the stock index. And the last one is lack of tradable shares. So if you own a stock from a company, that is a tradable asset. It is something you can buy, you can hold onto it, you can sell it, you can make money from it. But unlike a stock, the stock index is just a mathematical calculation, so you can't trade it, you can't claim to own it, and you can't trade it. It is not a tradable asset. So these are the main reasons why the stock index is not a tradable asset for you to invest in. So we will go on to know exactly how to make money if you still want to use the stock index. We have established the fact that you can invest directly into the stock index, but we still have the stock index. So what is the benefits of the stock index? What is the use of a stock index to you as a new investor? These are the benefits of the stock index, because in as much as you can buy it, it is still of use to you if you really want to maximize your potential earnings from the stock market. So first of all, the stock index is used to know market trends and sentiments. So what I mean by this is that if you choose a particular stock index, let's say the S&P 500 for instance, and you study the history of such a stock index, you would be able to know the trend of the market and the investor sentiment towards that specific market. So here, the rising index values could indicate a positive market trend or a positive investor sentiment towards the market, and a bullish market for instance. So it practically means that investors believe the market is going to go up. So in that case, they tend to buy more. And the reverse of it is that a declining index value simply means that a negative sentiment towards the market, and for that matter, a bearish market, which means investors are selling off their stocks, to make money immediately than to hold it and lose the value of their stocks. And the next one is risk assessment. If you follow the historic background or the history of a specific stock index, you would be able to know the volatility of that stock market, for instance. So you are able to have a risk assessment before you invest in a specific market that follows that stock index. And the next one is diversification. Now, when you start your investment journey, you may not want to invest in a market where all the stocks move in the same direction. So we will talk about things like ETFs and mutual funds. And the reason why sometimes it is very important to invest in an ETF, for instance, is because of diversification, where you have a whole lot of stocks in a single basket, so that all the stocks will move in different direction. Obviously, some of them are going to go up and some of them are going to go down. So what it practically means is that you are sort of guaranteed to make some money at the end of the day, because some of them will definitely move up. So the use of the stock index here with regards to diversification is that you may want to know that a specific stock index does not all move in the same direction, so that if all the stocks go down, then it means a loss for you. So the stock index may be able to help you in diversifying your portfolio. And the last one is timely decision. So as we said, the stock index is a theoretical measurement of how the stocks are performing. So a constant observation of the stock index can tell you where the market is going. All right. So if your observation or reading of the stock index indicates that markets are going to fall, then that is the time you may want to sell off your stocks. And if it tells you that market is going to rise, you may want to keep or even buy more of the stock and hold on to it and sell them at a later date to maximize your profit. So yes, you can't invest directly into the stock index. It is an abstract idea, but also the stock index is very important to you. By reading it and learning about a specific market, you may be able to make an informed investment decision. If this video provides any value to you, it enlightens your understanding on the financial market or stock index, please subscribe to support the channel, and don't forget to give us a like.